TGIF Warriors, World War III avoided for now. We had World War III pricing last night in the market. How are you, Alexander? Saloom, how are you? Everything okay? Maybe you slept through it. Ingmar, James, AJ, Paul, how are you? Hi, Ryan. Came in. I thought you were taking the rest of the day off. Okay, Glenn, Michael. Okay, everyone. So, we were here only down 490. So perhaps this sets up a correction. I don't think it's done. Okay, we didn't even get to 38% back, which I think is still doable. But maybe the route is A, B, C down to here. One thing I want to start off and ask Ryan about, Ryan, even when we were S&Ps were down 75 handles, there was really no flight to quality in the currency market. And in fact, during most of risk off, except for the CPI, there hasn't been a big response in FX in general to the risk and the war stuff. Risk off. And have you noticed that too?
Yeah, the majors seem pretty calm, even dollar yen. It's the time of the day as well. Into Asia, not much liquidity. Have a look at the dollar MEX though, mate. That went a bit bananas. That was probably the only real one that went bananas. Well, that and other MEX pairs, Euro MEX, MEX yen.
Oh yeah, all the MEX,
sort of all the
crosses.
It almost feels like I've been thinking I was short and I got knocked out in the first flip out, and it just feels like this one had been coiling for something, and it wasn't going to take much to push it over the edge, and that's the case. And it looks like it might be unwinding a bit, that one, because it's keeping a good chunk of gains. We're much higher up than we were yesterday, but it was a similar situation. We saw oil obviously take a jump, gold take a jump.
That's what I mean. But they responded. That's the difference, what I'm bringing up. They responded to the potential of an expansion of the war, whereas foreign exchange really didn't. I'm wondering if there's a shift going on. We're so used to risk off being a strong dollar and risk on being a weak dollar, and maybe that's starting to change. I mean, the direction hasn't changed yet, but maybe for a while, should the dollar turn up here, around, maybe we did already. I'm just looking for not much more of a high, but let's look at the weekly. That maybe the dollar, there'll be risk off with a weak dollar, and or there's a weak dollar, but the U.S. underperforms and money flows are out of U.S. into other markets. This is not enough for me to say it's over. It's not a reversal week to the upside, downside.
It's difficult because when you with this Iran-Israel stuff, there's always the overhang, or is the US going to get dragged into it, and then that changes the risk parameters for the risk trade in terms of the dollar. But again, this thing was another. I can't think what the phrase is, but it wasn't a big deal. It was a bit of handbags. They attacked an airport and a military facility. They weren't hitting towns or anything like that. So it was a bit again for show, and the market quickly reversed all those risk moves because of that. But the dollar's still, it's not given a lot of back. It's had we're still playing out the move that we got from the CPI data. Dollar made a strong move, and now we're in that. Well, what's next? What's going to kick it up a gear or send it the other way? And that's back to data watching. We get another couple of decent prints in some of the data, and we're going hawkish again. Get a couple of wrong ones, and the pendulum swings again. We get a dodgy PCE, comes in much lower. We probably start going the other way. So we're all data. Yeah. We're all trying to guess what the Fed's going to do. The markets, as much as us sitting here, and it's hard to, sit in a direction for a long time. Everyone was going, oh, when it was dropping from 108, oh, this is going to 105, this is going to parity. Well, we can't get through 106. So what you going to do?
What's interesting is sometimes you have a number that you're looking to enter at. And then as the markets develop, there's actually a count that lines up with that number. So I've been talking 105.20 for a while. Mm-hmm. So from here, 106 and, Blake wanted to sell at 107, close enough for government work. We got to 90. So, 90 underneath this low, gives you 105.20.
Yeah.
So that's what I'm waiting
for. That's maths for you.
Huh?
That's simple maths for you.
Yeah, simple math, but technical formation that lines up with a target that was, came up through a different methodology. These charts weren't, this price action wasn't there when I had it. So it almost gives me a little bit more conviction to be patient and wait. So Canada did not make a new high either on that yesterday, did it? So
no.
Yeah. All right. Well, yen fought its way back. What do you do? Who wants to take big positions home over the weekend, even though I don't think they're going to do anything for a while now.
Not me.
Yeah.
No, okay. I think that's.
Come on, guys.
There's a lot of us trading very lightly at the moment in the chat room.
Go big or go home.
Go big or go home. Okay.
Hello. So, hey guys, how you doing?
Good stuff.
Hey, mate.
Good. So you're talking about the euro dollar and how it's not actually. Let me take the screen for a bit. I'm going to show a few things.
Yeah, I appreciate
stop screen sharing. Yes, continue. Desktop 1. Here we go. So you're talking about the euro dollar correctly. It's we need to break 106 first. The question is this. What's priced into the market in terms of policy divergence between the Fed and the ECB? Because let's face it, this is what's been driving this pair recently. It's not risk on, risk off. As Dale correctly said, this relationship between risk on, risk off and the dollar is not as clear as it used to be. So the problem that the dollar has at the moment for dollar bulls is that the market is now pricing one cut by November, if I'm not mistaken, and then 2 more next year, and that is it, or something like that. So we've gone from pricing 6 cuts or whatever it was earlier this year to 1. And on the other side, the ECB they are basically talking about cutting in June pretty loudly, right? So we have a very clear divergence. And yes, Williams yesterday said that, we're, hiking is not our base scenario, but we could consider it. I don't buy this hiking talk, especially not during an election year, because I think if they start hiking, I think markets are going to go down pretty fast, and they don't want that. So the problem with being bullish a dollar here is that, what needs to be priced in for this to keep going lower? Obviously, if there is some kind of a World War III event happening, or big scare, not what we've seen over the past few days, but something major, a black swan, yes, the dollar might get a bit. But look what's been happening over the last year in the euro dollar. It's been pretty flat. I mean, yes, it's had a range, 105 to 112, whatever, but in the grand scheme of things, it's a relatively shallow range. So given everything that's happened with the Fed compared to the ECB, this should really have broken down. And
you know what, Stella? It reminds me of the same narrative you and other people were talking about with gold. That gold
Yes.
has fought everything through the kitchen sink at
Yes.
gold with higher rates and
Yes.
everything else that was sinking and a strong dollar, everything. And it just would not go down. It
Yes.
just, so yeah, so is, that could portend a nice buy in the euro coming up here, right?
I agree 100%. We were talking about this for a year or so, right? We were saying, look
Yeah,
at how resilient this has been, and
yeah,
we got the breakout. But
yeah.
that's the thing, obviously you can't be sure about anything, right? 100% sure.
Hmm.
But it's just the way this euro dollar trades feels to me stronger than it should have been, given all the facts that we have seen. And of course,
Exactly.
you mentioned gold. I mean, precious metals. I talk about these a lot. They've been doing really well, and I don't see a reason why they should. That should change. And for people who have been following me, they will have known I was long silver at 23.10. I recall, to a 10, 12, something like that. There were two clear levels for me, 26 and 30. So I took a third off at 26. I wrote it on the chat room. I took a third off just above 29. I didn't quite catch it up, but it doesn't matter. And now I'm looking to re-enter. But what I really like, and again, I wrote this on the chat room yesterday, is platinum. Because if you look at the ratio,
Oh, yeah.
if you look at the ratio of platinum to silver, technically it's looking pretty good now. And
How
also
does
if you look at,
platinum to gold look?
good question. Well,
Because it used to
it used.
trade at a better than $1,000 premium.
I remember that when I bought my wife's ring, I said, "Well, I'm going to go all out and buy platinum, which is more expensive." Stupid
Okay.
move.
You could
Anyway,
have got what they have white gold.
yeah, yeah, I know. But and
Anyway.
for platinum, I also like to look at the macro thesis. And platinum, the biggest use is catalytic converters. And the last 10 years has been all about electric cars and how internal combustion engines are going to be gone and all that. Well, I disagree completely with that thesis. It's pretty much impossible to build, the how many 2-3 billion cars that are needed to you know to service the world. So I think at the moment, if I'm not mistaken, I was reading this yesterday, 6% or something like that of sales is electric cars. If that gets to 10-15%, I'm going to be amazed. I don't think it's going to get more than that. But anyway, I like platinum, and I'm really thinking about getting long, but not quite yet. But I think we're getting there. Probably somewhere around the if we get anywhere close this 850 area, 800 to
Yeah.
830 area, I'm going to really like that.
Can
Anyway,
you pull up your silver again,
yes, sir.
the weekly?
Yeah.
Where, if it did want to
Yes.
check the breakout, where's that come in? Under 25? No, underneath
Oh,
the flag
here,
break. Yeah.
yeah, 25. I
Okay.
think I think it's going to really struggle to break below the
26.
original, which is 26. So I've got some bids in
Yeah.
at 26.20, just waiting there, just in
Yeah.
case we get something ridiculous. But the trade has done really well. I still have a third on and some miners, which have also done okay. The miners have been underperforming quite a lot because of yields, because they have loads of debt. Anyway, I digress. So. We talked about the euro. Stocks are very interesting because I think today it is option exper. Is it OPEX today? It is
Yeah.
today, isn't it? Yeah.
Yeah.
What we've been seeing recently is selling pressure into OPEX. I really will not be surprised if we see the S&P close today, up 1% or something like that. I think there's going to be buying into the latter stages of the day. I could be wrong, of course, but that's my view, and that's what we have seen in the past relatively recently.
Do you think 4,800 is viable still? That's where you have the breakout line.
Yeah, yeah. Well, we could. It only takes a scare like we had yesterday. Anything bigger, more escalation, and it's only 150 odd points below
Yeah.
the lows of today. So I think
Yeah.
that could happen. I'm going to put some bids in there just in case.
Okay.
Not big bids. I like to trade event risk, but these are big binary events. If you get it wrong, you're screwed. So I'm going to put small bids in with stops and take a gamble. Sometimes you got to take a gamble, calculated one.
Yes.
What else?
Oil?
Uh,
What do you think of oil at?
Oil is a tough one. Oops, not 10-year.
Yeah, oil was yeah. Oh, and has the move in rates surprised you? Because I know you're kind of a
yeah. Yes.
yield
Let's talk
bear
about yields
bull.
first, and then we go to oil. Yeah.
All right.
I thought that we were going to see lower rates in yields. This move has surprised me a little bit, but again, we've got to the point where we are pricing very few cuts in the US. So what needs to happen now for us to get to, 480? We take everything out and we price in hikes. I find that hard to happen, but of course, who knows? But
Yeah.
I still think that this structure here, this last, 6, 9 months of pricing, is going to break to the downside eventually. I think so.
Yeah. It could
But
be a failing rally here, a B wave, and then we get a big C to the downside equal
could
to
be.
A.
Yeah.
That's what I'm looking for.
Yes.
If you pull up TLT, I don't know if you have it up there, do you?
I have it.
All right. All right. So zoom in a little bit, and you have
Okay.
the same formation. So it gapped that bottom line, I think, if
Oh,
you
really?
extend the bottom line out. Okay. So you have,
Yeah.
yeah. Okay. You have a little different look. It's inside the line. So it
Well, I haven't
hasn't,
drawn it too
oh,
well. There you go.
uh,
You're right. Anyway, I haven't drawn
no,
it well.
no, I think it was, I had it where we didn't really get back over the 89 level. That's
Uh,
what I need.
okay.
The
Okay.
bot like wait for 89 or 90 to confirm it. But
Oh, you mean the
anyway,
gap? Okay. Yeah, I get it. I get it. Okay. Okay.
yeah. So
Interesting.
yeah, so that's a big deal because here we are, we're under 61.8 now. We
Yeah.
almost got what 78.6, 88.57. Is that it? 80.
Yeah, 86.57 now. We got
Okay, we
halfway.
didn't get there. All
Yeah,
right.
yeah, yeah, yeah. Interesting.
Important
Okay.
juncture. Yeah,
Yeah.
important juncture there
Uh,
too.
and you mentioned oil. Oil, I think most likely, if you could have gone to my head, which way does this resolve? I think to the downside. There's been a lot of geopolitical. Obviously, if there's some kind of huge escalation, all bets are off. But given what's been happening in the world, I would have expected oil to have broken above these highs and gone towards 90 and above. So again, just like with stocks not and the euro dollar not going lower, given the good, theoretically good developments that there have been, if this can't go higher, I think it's going to break lower. And
Okay.
if I was to trade this, I think it would break lower. But I'm not doing anything right here, right now, because there's just too many unknowns.
How
And
about your favorite FX pair, the NOK?
which one, dollar or euro? Anyone? Let's go
Yeah,
dollar.
yeah.
Well, this is a pretty clear resistance. If we get here, I'm going to try shorting it.
Okay.
Fundamentals for me are still very, very good for Norway. The only problem being Norges Bank selling kroner pretty much consistently. But if you look at the economies, the surplus that they're running compared to the what is it, $1 trillion every 100 days that the US is borrowing now. It's crazy numbers. So for me, on a macro level, the NOK is fantastic. It's just that it gets sold by the central bank, and you have to pick the right places. So if we get close to 11.30, I'm going to take a shot.
Yeah,
Because let's think about it. The only time this was higher than these levels was during COVID, which was, I will ignore these two candles because it was just something that will probably never happen again, this kind of event.
yeah, yeah.
So I like this on the short side, but not yet.
Okay. Because that second top never took out the first high. So
Exactly.
there's a bunch, wait for a stop run above it and go for it.
Exactly.
Right?
Exactly right. Exactly right.
Okay. Thanks, Stella. It's really great to have your analysis
No
back
problem, my
here.
friend. No
Show
problem.
up here every few months.
Will do. I'm going to pass the screen back to you guys, whoever wants to
All
take
right.
over.
I think Nick is here.
How's it going, Dale?
Good, Nick. You want to update the S&Ps and what you think with this kind of pin bar we're getting here? Maybe we completed the first wave and we get a bounce for B.
Yeah, I sure can. What a move last night. I was up pretty much, watching what was going down the whole time. It was pretty confusing because as we started melting, the reports coming out was that, they potentially hit some nuclear areas, and, it looks so bad. I had tried getting long yesterday, got stopped. And then I think what's really important is that overnight we hit some really key levels. Sorry, let me remove that. What the heck? Well, the way I was looking at it was just I was drawn out in case what Stel was saying would look like, if we did move up 1% today. But let me try and move this. I think what's important is that this level right here at 49.75 was a massive level for options, and a big level that I think the market was looking at. I know I was definitely looking at it. And we came down, we got kind of close to the 618, but this is of the 2024 range. I think the issue is now is you might have a lot of people chasing this market now that we've kind of hit down here. They didn't really get their opportunity to get long where they wanted to. And I'm curious to see if we end up chasing. Prior to what happened last night, I was looking at the NASDAQ as a falling wedge. We were here around the close, and I was wondering if we broke higher, if we broke resistance here at 17,622 or so, if we were going to rip higher. Now the risk is, if now that we've already dipped, you have a false breakdown and maybe we squeeze up. I did take a small long last night as the news started to kind of dwindle down, just because of how significant I think these levels are. These are levels that I've definitely been waiting for a long time. We came down to the 618 of the NASDAQ for the 2024 range. And then from a longer perspective, you're right. We haven't quite gotten to that 38.2. NASDAQ came darn close, but I think it's important to note that we've been through a decent correction now, and maybe things do start to lighten up. I feel as if inflation might kind of ease in next month, and we also have earnings next week. Speaking of earnings, we did have NASDAQ yesterday, and although the earnings were relatively positive, this stock's set to open up down, quite a bit. Right as of right now, we're looking at about a 6.5% down on the open. But we're just gonna have to see how, if this is going to be a trend next week for tech stocks. That's what I'm concerned about. Although I do feel as if we could bounce in the equity markets, say a move back up to 5120 or so in ES, 5100 in S&P. I do still want to be short. I know we have a lot of indicators like, the Dow Jones Transportation.
I think you have a Dow theory sell, actually.
Yep. And I was talking about this on a couple weeks back on my week ahead video. When you start to see the Dow Transportation weekend, you could come into some tricky times to navigate the market. But yeah, I think we've just seen a decent pullback. We've came to the 38.2 in IWM. RSP, the equal weighted S&P, has come down to the 618. So, I think it's interesting because looking back, it's always really hard to know where a bottom's in or something, or some pop could come. But you could, if a week from now, we're up near here, you'd be like, well, we tagged the 50% retracement in this giant bull run. Of course, we're supposed to be going higher. So it's tough.
Maybe this is just A, and we got a B wave rally and then a C.
Yep, I'm wondering about it. I think fundamentally it makes sense to be short, but it had made sense this whole time too for me. So
can you pull up NVIDIA?
Yes, I can. So NVIDIA has been really interesting. Yesterday it swiped the lows of April 9th, and then it closed above it. We're set to open around there.
It doesn't look complete to me for some reason. The daily looks incomplete. That maybe we could still get a grand out of it,
I think so as well. It's just it could happen really quick, and I feel like today is setting up a lot of FOMO if you wanted to be a dip buyer. But like you guys pointed out, it is options expiration. I think you had a good interviewer yesterday talking about negative gamma exposure, and how that's affecting the way in which big funds are hedging. So downside looks likely. I also noticed, and I don't have it up right now, but fear and greed index finally hit fear for the first time since I want to say October. which I found pretty interesting. But yeah, volatility is rising. We saw that spike above 21 overnight. It seems to be selling off. I still think volatility can continue higher. I think support's around 17.1, and below there is going to be that 16 level that we struggled with
Who experiences
for
fear
a
more
while.
than
Still with you on
greed?
TLT.
Who
Right, exactly.
experiences fear more than greed? Give me a why if it's fear more than greed, because I'll tell you why.
Are you asking me or
No, the
the
community.
chat? Yeah,
Okay. Because you're never in a good enough trade to be able to feel greedy.
right.
Okay. That's why. Because the fear isn't letting you do it. So your fear of letting profits get away from you and you book it. And I only know it why, because I could see it in myself. Anything you see in other people, you couldn't see it if it wasn't part of your persona. Okay, so that's why you don't experience greed much. Get over the fear. And one way to get over it's with trailing stops, and you're protected. Okay,
Yeah,
so
certainly.
anyway, I want everyone to feel greedy in here.
Yeah,
Greed is good. I'm Gordon Gecko. Okay, let's get greedy and
that's
then
right.
share everything with people in need. And that's good greed. Greed is good, Gordon Gecko. All right, go ahead, Nick. So you wanted to talk about TLT. I think we're at an important juncture.
Yeah, I definitely agree with TLT, with you. We've both been looking at that. I'm just looking for a daily close
Okay.
above
Yeah, same
89.50 or
line.
90.
Stell, that's a line I was talking about. Nick has the right line.
Yeah, this is where I'm
Uh,
hoping to see us get
yeah.
above. If
What
we
do we
can,
need? A 90 close or just an 89 close will do it?
I think I'd like to see 90, but I
Okay,
think
yeah.
anything above these highs, it would put us on highs at the weekly if we actually got above there today.
Okay.
So we'll just have to see. I did want to point out the DAX index. I don't always look at it, but it's been on my radar lately. From a weekly perspective, dating back to 2015, we could be experiencing a little bit of a throw over if we get below here. We did tag channel resistance, and we are currently at the 38.2 of the 2024 range for the DAX. So kind of a interesting
Yeah.
level here. I think if we get back below, we could see some weakness potentially down to 16K or so.
Are you looking at the Nifty at all, Nick?
I am not.
Okay, well, I know someone says that's top. And
Oh,
besides
really?
Rohit, who did on an interview,
Yeah, I
you know,
guess I
not all the markets are going to top at the same time,
I
although,
agree. And we're
right?
seeing, I mean, I know I've been talking a little bit bullishness, but we're seeing some bearishness. I mean, the housing index, I have this head and shoulder pattern that I've been looking at. It looks like it could definitely move a lot lower. Let's see. I know the XLY that it had a bit of a double top that it looks like it's
Wow.
completing. So, but yeah, this looks close to completing, which is interesting. We'll have to see how we react from here, but we're on pretty solid support. You definitely don't want to see it break below here. XLE, this had a bit of a breakout at one point earlier in the year. We hit one of the highest levels since 2014, and we're now back below it. After this,
Yeah.
This dates back to June of 2022. So
That's
that's a
negative
significant,
for the market because that's been a pocket of strength.
right? Yeah. So there's definitely some cracks. We're just gonna have to see where people want to step in. I felt like it could have been where the levels were last night, and now the market might be waking up, not being able to get it. So I'm wondering if we have a bit of a FOMO pop. If things, but granted, and you pointed it out, I don't know how many people long over the weekend.
Okay.
So
Well, we have an interview, and Angela, that's because you're getting greed before you do the trade, making the decision on leverage isn't the greed I'm talking about. The greed is when you're, stay in a trade like GameStop. Okay. And, most of us would have been out well before those guys were in that movie, Dumb Money. That's what I mean. greed.
That's
Not
right.
at the beginning, and you use tremendous leverage on an entry. The greed should kick in when something's working for you instead of the fear. That's what I was talking about. But thanks for the counterpoint, and I have Bruce Fraser here with us, who's going to help me promote Bruce so we could look at some great Wyckoff stuff. Who's going to help
I will
me?
go ahead and pass it over. Thank you, Dale.
Yeah. Hey, Nick, have a great weekend, buddy.
You too.
Have a good weekend, everybody.
Oh, hi, K-Man. I thought you were taking the day off.
No, I said after F.A.C.E, but that's all right.
Oh,
Have a
after
great
F.A.C.E.
interview, mate.
Okay. Bruce over there? See if it'll let me. Okay. Yeah, there it is. Bruce coming over. You're welcome, Marcus. You're welcome, John.
Dale, can you hear me?
Got you, Bruce. Great to hear your voice.
Oh my gosh.
Great
Great discussion this morning, as always.
I was going through withdrawals now talking to Bruce Fraser. If I don't get a Bruce Fraser fix every 3 months, I start jonesing. So anyway,
well, I talk to myself all the time.
I do too. You know what I say to myself? Why did I come into this room?
Well,
what am I doing in this room? I know I had something I had to do. Anyway, I think I saw.
We must be about the same age.
Yeah,
Dale and I actually came into the business around the same time, both at Dean Witter, right?
Yeah, that was my first job as a runner with Dean Witter.
Yeah, I was with Dean Witter. Yeah.
Yeah, and then after I was a runner, and then after the close at the Merc, I'd go sell washing machines at Dean Witter Sears. Remember?
There you go.
Sears. So
stocks, socks, and shocks.
That's it, buddy. Anyway, I think I grasped a headline of an interview that you did with Blake, and I think the title was, things are changing, and so that tells me that you were getting some stuff to, kind of foretell a correction happening in the market. Did I read it correctly? Okay,
I think you did. And then also I put up a blog on April 5th. Let's see.
Yeah, there it is.
And it's I'm just seeing if I can get a pen if I need it here. So people can go read this. It's at stockcharts.com. And also Blake put it up. So thank you very much. And it's called Trifecta of Trouble. And it really just is a Wyckofian view perspective of the markets. And at the April 5th, keeping in mind that was the beginning of a new quarter. And for anybody that follows me at all, they know that I'm obsessed with quarterly market behavior.
Right.
And a number of indexes came in and made ultimate highs around the third, fourth week of March. March 21st comes to mind, and so on.
You know why? It was the equinox. It topped S&P's top 2 days after the equinox.
There it is.
And thank you.
There it is.
He said, look for turns around the change of seasons.
Well, and keep in mind that the institutions really drive this thing, and they really are driven by the end of quarters, up or down. And so here we can see here, look at this persistency in this uptrend. This is the S&P 500, and up it goes, and it started late October, late into the end of the third quarter, beginning of the fourth, and went up and through over the top of this channel. Right. And we call this an overbought condition, a throwover. Wyckoff is very old school. It goes back to the late 19th, early 20th century. And so it's very much oriented towards price bars and volume.
Where is the throw over line, Bruce? Did we take it out, or is it
you can see it? I'm actually going to even update this a little bit, but you can see it like right in there.
Yeah. Well, what's the price on the throw over line? Do you know?
Let's do this.
Make it bigger.
Maybe that helps. That's around, I would say that's around 51.50. And I'm going to show you some point and figure work that pointed to 52.50, which is exactly where it went.
Okay.
And
so that's an interesting area, because I had a 9-week moving average there that I said if it was broken, there was a lot of space underneath the market. So if we're going to get a rebound here, it looks like we are from here.
Well, look at all this room inside of this channel.
Yeah.
And these are two trend lines that are both, trend lines on their own point. So here we call this an overbought or supply line. Here and here, this is called a demand line. And note how each one of them is parallel. So this thing has been running up in a parallel fashion. And actually, this area down here is really important to a Wyckoffean, because we call this accumulation. And so the whole time, there's always a hook. I had a great old mentor, somebody who used to come to Golden Gate University and lecture a lot, and we became friends, Joe Granville. And he called this climbing the wall of worry. Yeah. And there's always a hook. And this is the psychology. And the hook is, back here was, the Fed was raising rates. Yield curve was extremely negative.
Right.
And among the most negative it had been going back to like the early 80s. And so this was a big worry for people. And the market just walked uphill against that. And at that time, we were taking point figure counts and counting this accumulation structure, because when pessimism is high, which was measurable throughout this whole accumulation area, when pessimism is high, that means institutions and the public has a lot of cash. So we always wanted to be really focused on the psychology, which you all were talking about just before I got on. And I think greed may be even the wrong term, in that fears, I think, really a very important term. But I think it's complacency, Dale.
Or in hubris.
Yeah. And so I think what happens is there's no complacency down here.
No.
There was complacency up here.
So what's the hook? What's the hook here, Bruce? Everyone's waiting for lower rates. I think that we may be peaking without taking out 5% in the 10-year, and TLT could end up. This could just be a pullback from the October rally. Could the hook this time be lower rates? Do not support risk.
Well, and this yellow shaded area. Let me pull up this is up to date now. Yeah. This is through yesterday, the 18th. And so you can see what has happened since, that it has fallen back into the channel. Now, we could have a lot of volatility inside of this channel, just as we did from July, August into October. And the other thing that I think, because we did have a tremendous amount of optimism up here, so everybody was in love with this market. And what I got a big kick out of was down here, there was a lot of, fear, concern. Up here, you have people coming out of the woodwork calling for 6,500 S&P, 7,000, all that. Well, all that is endemic of excess optimism. And these are the Wall Street types. These are the opinion makers that are making these calls. And so we have to be really. This is such a good graph. Yeah, this is the
stock. Yeah.
This is the New York stocks above their 50-day moving average.
Yeah.
Which is a breadth style indicator. Right. And I use this a couple of different ways. Overbought, oversold. I look for divergences. So, and then the other thing is you get an oversold and then you start to get an upward stride. Well, that's a really good time to start looking for leadership in stocks and trading them, even for a swing trade. Yeah. So I'm I'm looking for these, and I'm trading the best stocks in these oversold conditions once this indicator is starting to rise. And the best thing that could happen, and that's what this green shaded area is when you start to get divergence, because you can see lower lows here. Again, end of the third quarter of 22, the ultimate low below the selling climax. And this is already walking uphill. So we call this green shoots or a divergence. And you want to be looking for what are the individual stocks that are going uphill against a falling market and trade those for the subsequent rally. Now, we have a condition in reverse, which is that you can get overbought. And this is above, 75, 80, 85%. And you get overbought and then you start to turn down. That's a point of caution. Divergences can last longer, but look at what happened to these markets when it became overbought. They started to peak out and reverse. So here we got two things. We got an overbought condition right at the end of the year, and a number of stocks peaked out then. So the way to read this indicator would be, what is it that's peaking out above the 50-day and starting to turn down? And of course, we know the Mag 7 continued to just ramp ever higher, but there were a number of stocks that were no longer participating in the uptrend. And here you went to a lower high at 75% at the final peak. This is a big divergence here.
Yeah, that's what I was talking about.
Yeah, and so now look what it's doing. It's like going straight down and is now about 30.5%. 30% of New York Stock Exchange stocks are above their 50-day moving average right now. Okay. So now here, this is sort of the reason for, and now this is old school horizontal point and figure counting. And people find it very mysterious. It's a very big part of what I do. You're going to see a few of these today in whatever time we have. What do we have till 9 o'clock?
Yeah.
So this is that accumulation structure. You'll note here, this is January of 23. And we're in this accumulation area, and pessimism is extremely high during this period. A lot of cash being raised among investors and the public, and amongst institutions becoming somewhat more defensive. And look, so right at this point here, for a number of reasons, I concluded that this looked like the completion of accumulation.
I remember.
And this was right at January 18th, right at the beginning of the new year, 23. And so I took this count at that time, and this is a 3-box reversal method, 25-point scaling. And I got what I call segmented counts. And the counts that we're going to focus on here are these two up above. These came into play and were important, but here we had a count 50.75 to 53.50, 62.75 to 65.50. And this is the reason why I think that even though we may be in for a pause here, build up some pessimism, get traders, speculators, momentum people to raise cash, get a little more defensive. I think this could be the ultimate level this bull market goes to. And at the time, they thought I was certifiable. I'm saying we're going to go to new highs here, above 4,800, the 2021 bull market peak. And people thought I was certifiable. Well, then once we got to new highs, people are going, oh, we could go to 7,000. Right. But this is when it counted. This is when this is the beginning of a really good uptrend.
Is there anything in point and figure that would give you an idea of where this pause correction might complete? What price level?
Yeah, as a matter of, that's the problem with Dale is that, you can never stay ahead of him. He's always thinking one step ahead. So here,
sorry, I can't help it, man.
This is the last reaccumulation before the bull market peak in 21. Look how well this worked out.
Yeah.
It went right to 4,800.
Yeah.
And so this was just a gorgeous count. And then here, this is one of the counts that was a segmented count that went 48, 50, 5,200. Well, and then here's the accumulation structure count, and that goes up to 6,350, 6,700. Well, actually, we went right to 5,250,
right,
and touched 5,250 on the 50-point scaling. So this says this was our stopping point here around this 5,200, 5,250 area. And then if we went back to this is where what I think we could do
4,800
is this is the resistance zone defined by the bull market peak of 21.
Yeah.
And this goes, the high of this area is 4,800, as I said before. I think it's very possible this could be the area that we go into.
Mm-hmm.
Somewhere between the high of 21 and the bottom of the distribution area, which would also make sense because look, we're coming right into the stride of this uptrend channel. We don't have to go all the way back down to it, but
yeah,
this is where the 200-day is.
Yeah, 46.70. Okay.
And so, yeah, so that's kind of what I think is going on. Now, here, let's see. This is a 60-minute S&P chart. I like to look at the intraday, both from a Wyckoff perspective. These are Wyckofian symbols, and you'll notice my charts are pretty messy. These are actually case study charts that I used with students, and my blogs, which the total archives are there for you to go look at, everyone, is you can go read about what these definitions mean and how we determine them. But here is a distribution structure on, this was April 10th, on the hourly S&P. And this is demonstrating distribution. And when we start to get a series of what we call last points supply, these are the lower highs that set up the ultimate markdown. This is simply an oscillator. This is the New York advancers minus decliners. And now here's a point and figure chart that I took on April 10th of this structure. And everybody just sort of keep this in mind. 50-10, 59-60 was the 60-minute count, which could very well constitute some kind of a swing trading target where we could get a rally, which I think would be another bigger rally to a lower high.
Well,
in this
last night
downtrend.
we got down to 49.60, Bruce.
Well, there you go. And we actually on the
49.75 on the low last night.
Okay, thank you for that, because I did not know that. Here
there was the S&Ps were down 75 handles on Israel's drone attack last night.
Okay, and
fought their way back.
So as of the this wasn't the close yesterday. This was 2:40 Eastern time yesterday during the day, but we hit 50.05. So we did hit the minimum objective, and then you're saying we got even down to here overnight. Yeah. And so we have fulfilled this swing count, which appears to be some kind of potentially climactic event. And then I heard you all talking about how we could have even a rally by the end of the day today based on expiration and so on. Entirely believable, entirely believable. And then here, see, here's the target zone of that point figure count that I just put up.
We got
so people. Now this is just interesting, and then we can get a little bit into interest rates in the time we have left, or gold, whatever you want.
Go ahead, run the interview.
So here's the Dow as of June 3rd, 23. And you can see here, this is a reaccumulation style structure back into 22. And it's a, what I call a swing count, one box reversal method, point and figure. And I write a lot about how to do point and figure in my blogs, but it counted up to 392 to 404. At that time, this is June of 23. And this is just taking this segment. And this is where we went as of, and I believe this is the highest we've been in the Dow. Well, isn't this what you were talking about, the date for?
That's the equinox.
Equinox right here. And it happened for the Dow on that date. Look where it went, 398.82. Went right into the middle of our count objective range. So pretty amazing. And then here you can see this count. You can see, I think that there's, I'm trying to think, there's a little bit of a difference in the way the count came up, because this is 396. I think this is because it includes dividends. Anyway, this count, this gives you an idea that it went right to the count objective. So this is what happened since. And so this is as of April 17th. But now here's what the Dow looks like. This was as of the 17th. It went to 376.14, and this was our swing count. This is a daily chart, and one box reversal, 2-point scale. You can see this is where it went, 376, 368, which we ended up overnight, maybe somewhere in here, Dale.
Yeah, you don't include that action in your point and figures, though, do you?
The overnight.
Yeah.
No, I don't. And I tend to get pretty good counts using just the exchange data. And but oftentimes when I do intraday, I will do the overnight.
Okay. Because
these Wyckoff setups occur overnight for sure. So now just this is the Qs as a surrogate for the NASDAQ 100. This is again February of 24. This is the count area. And then this is taking the widest part. Sometimes I'll take two counts, but the widest part of this count counted up to 449.46. And as of the equinox, 449.34.
Nice.
And so this is as far as we got. And you've seen what happened since. Here's the NASDAQ and what happened. Here's a point figure, 30-minute of this distribution structure. Now, keep in mind, this is the lowest I've seen as of 418, 423.81. We have a count in this 30-minute data that goes down to 382.20, 376.32. So we do still have room to go down in the Qs. Okay. And they may be holding up better because of the Mag 7 type stocks, the growth stocks.
Okay, nice.
And note here also, look at how now this is the NASDAQ 100 stocks above their 50-day. This is the NASDAQ composite stocks above their 50-day. Much broader list, but in both cases, note how even these NASDAQ 100 stocks started to deteriorate off their peak at the end of December. Yep. So fewer and fewer stocks are driving the market up, and those were the mega cap names.
Yeah, and they finally caved, like Amazon.
Yeah.
And Microsoft.
Here's what has happened since, and look at this fall off. So now we're starting to get reasonably oversold in a number of the different breadth oscillators and so on. Being oversold is not a reason to start buying yet, because sometimes if we look really study bought oversold indicators, sometimes the best part of the move comes after you get reasonably oversold. Right. So we may have more weakness and lower numbers before this is over.
Yeah.
So, and then also again, look how low it got back here in September, October of 22. And look at the damage that was done from reasonably oversold to where it ultimately ended up. And then you had divergent characteristics.
You still need price action.
You still need, absolutely.
It's king. It's king.
It's king. That's why Coffeans, we absolutely care about price action. So here is where our count takes us, and note how that is into the support area of the 2021 bull market peak.
Nice. You have time for an interest rate look?
Yes, let's do that. So here is the this is the 10-year treasury, and this is what I brought today. So we certainly could do other analysis, but we'll have to do it next time. This is the area that I counted, which was the accumulation structure from late 2018 into the early 22. And this count here, which was in the area of 1.7%, you just move the decimal point over 1, is 4.3 to 5.6. And we went exactly to 4.3 here.
That was a big area.
Pulled back, and then up we've gone, not getting quite to the 5.6, but we did get into the target zone. Now we're starting to push back up again. It is conceivable we could get to 5.6. Here, if you look at the right now, this is the chart that's a little bit scary, but the reason I put it up because Dale and I survived the 70s. And we started in the business when interest rates were 14, 15, 16% treasuries. And
the good old days.
The good old days. And so what I did here, same chart, is I took the complete count of the structure, which goes back to 2012. And keep in mind, point and figure can't tell you the when. It estimates the potential for the extent, which is hugely valuable, but it can't tell you when it's going to do it. So interest rates started to go up cycle after cycle in the late 60s and did not complete their upward move until the early 80s. Yeah. And so I think from an analog perspective, the 70s is a good roadmap. Yeah. And I think that we're somewhere around the early 70s. That was the end of the Nifty 50 era for stocks. And that's also, I think, the end of the Mag 7 era, which is what we're in now for the growth stocks. They're comparable in their excesses then and now. And it could be another 10 years before we see the high for interest rates.
Yeah, and that's that would mean 14% to 16%.
Exactly right. 13.9 here up to 16.1 is this count structure. And again, it could be years before that's even possible. And it may not even happen. Let's hope it doesn't even happen. And but this little swing count in here, which I included, and I do believe we could get there sometime in short order, is 6%. Okay. And so we may have to go here before we have a more meaningful consolidation and pullback.
What a great presentation. Another one by Bruce Fraser. So Bruce, if people want to learn the ancient art of point and figure, where do they go?
They can go.
Do you agree it's an ancient art?
Oh, there's no question. It's very old school. I use
older than candlesticks?
No, but I'll say this. Right. I'll say this. Point and figure, I believe to be as old as candlesticks. Okay. Maybe older, because that when they used to trade rice futures, In Asia, way back when, centuries ago, they used point figure charts to track rice prices and also did horizontal counting on those.
Wow.
So
okay.
point and
Great
figure
history lesson.
Yeah, point and figure goes way back. And I absolutely love point and figure. Go to my blogs, which are not behind a paywall, stockcharts.com, articles. You go right to the homepage. At the top, it says articles, and then just look for Wyckoff power charting. And you have access to all those. And then, of course, WyckoffAnalytix.com. Lots of great Wyckoff content there, too.
Yeah, what a guy to learn from, Bruce Fraser. So thank you so much, buddy. It was great seeing your work. You know, we've been talking for a few years now, right? At least 2 or 3.
Oh yeah. You
know, I want to thank you for coming in and
oh my
and sharing your work, because I know it's hard work to keep up all this stuff. I know you love it, but it's still hard work. And for you to come here and edify our community, we're all, you know, we all appreciate that you do that.
Well, you've all been wonderful to me, and Blake and you, Dale, and others. And I just I love coming here. It's been fun.
Don't forget who discovered you here.
Exactly.
All right. Anyway,
I owe you a drink.
You know, I'm your Colonel Parker. All right, Elvis. So anyway, Bruce, we'll get back together in the summer and see how a lot of these things are playing out. And I always root for you and much success.
Oh, thank you.
Going
thank
into
you
the
much.
summer for you and all your subscribers.
And by the way, for those of you that want to do more or about see more about what we talked about today, Roman and I, my teaching partner, put up on April 10th a Wyckoff market discussion. Free. It's absolutely free. It's on YouTube, and you just go to this address at the top, and you can go watch that, and you can get more granular on some of the topics we discussed.
Watch it. And thanks so much, Bruce.
Dale, thank you.
Have a great weekend. And everyone out there that watched this, have a great weekend. You join the team in about 14 minutes. And don't forget, don't just count your missiles or drones. Count your blessings.
Amen.
Amen. So I'll see you. Thanks again, Bruce. And I'll see everyone Monday. We'll lay it out all on the court and try and bring in people almost as good as Bruce next week. Okay? That's a promise. See you later.